In scenario 220, the ability to add capacity is added to the simulation. Currently, ArborCrest Studios has 4 fermenters, but this does not provide sufficient capacity to deal with demand in the summer months. In this scenario, an investment can be made to put a 5th fermenter into production. To purchase and install a fermenter requires an investment, and ArborCrest AL Studios has to manage its finances properly to be able to afford that investment. To provide a historical context, in 2009, not long after the housing market collapse, of the big 3 U.S. automakers, General Motors went bankrupt, Chrysler went bankrupt. Only the Ford Motor Company survived that economic crisis without having to go through bankruptcy. The reason that Ford was able to survive the economic crisis without having to declare bankruptcy was that Ford had foreseen an economic downturn, although not as significant as actually occurred, and prior to that had arranged for financing to give them a cushion to continue to run operations and develop new products. At the time, many questioned the leadership of Alan Mulally, Ford's chief executive. However, this turned out to be a very wise move on his part. To understand more about the financial crisis in the automobile industry, there's an excellent book, American Icon, by Bryce Hoffman, that details the auto company's challenges during this time period. It's recommended reading for any business student. Companies fail because in the end, they do not have enough cash. This usually results from a long string of decisions, not to adjust to the marketplace, not to modernize, but in the end, companies fail when they run out of cash. So cash flow management is very important, and it's important to manage cash flow with ArborCrest AL Studios to make sure that the investment can be made with sufficient cash and sufficient resources. There's an automatic treasury function provided by the simulation. Treasury management involves a number of different activities. One of the most important of those is making sure that the company has sufficient cash to run operations. In the income statement, the net income is a long-run indicator that the company is profitable, but that doesn't mean that the company has sufficient cash to pay bills, to pay employees, and actually stay in business. In the simulation, the automatic treasury function requires cash to stay above $50,000. If at any point the company's cash account has less than $50,000, the treasurer will borrow money, and this is usually at a higher interest rate than the current loans that the company has. If the treasurer has to borrow money, you will receive an email in the simulation. Loans are made against assets of the company. At a certain point, the company no longer can get loans because all of the assets are leveraged. In other words, money has been borrowed against all of the assets, and banks will not be willing to loan money. In this case, the treasurer will have to sell stock at a discounted amount, in other words, at less than the value of the stock originally. This dilutes your ownership in the company and is a situation to be avoided. In scenarios 210 and 215, an option was added to the results menu to look at general ledger account history. To understand ArborCrest cash flow over the year, we look back at the previous scenario and select cash and cash equivalents. Then click on Draw Graph. This graph shows the cash balance over the year for the previous simulation. Notice that between January and April, cash drops. That's because we're building inventory to feed summer sales. Note in this example that the cash gets very close to the $50,000 limit where the treasurer will borrow additional money. Investment in the fermenter will require cash. The total investment will be $50,000, which is spread over a number of periods. Therefore, it's important to manage cash, and it may be a good idea to borrow money early in the simulation to make sure that the cash does not run low. To borrow money, select Borrow under the Treasury menu. This will bring up a screen that will show the current loans that the company has and loan options in the lower grid. There are 5 loan options, however, ArborCrest is only able to take advantage of the last 2. This is because the Altman Z-score, which is used to evaluate ArborCrest creditworthiness, does not qualify it for 3 of those loans. The Altman Z-score was originally developed in the late 60s, and it was used to evaluate a company's financial health, more specifically, to predict whether a company was going to go bankrupt. The Z-score is calculated using a number of financial ratios that are used to evaluate the firm's financial health, its ability to generate cash, the assets that it has, and how much debt or liabilities it has. The Z-score in the simulation serves like an individual's credit rating, determining how creditworthy the company is and determining how much it can borrow. To borrow money, especially to fund a new fermenter, select Treasury and then Borrow. From the available loan options, which are shown in green, select the loan option with the lowest interest rate. On the next screen, you can see the maximum amount that could be borrowed. Enter the amount of money you want to borrow. Click on Confirm Loan. Click on the confirmation pop-up. And you'll now see that there's a new loan added to your existing loans, in this case for $30,000, which will have a monthly payment of $2,623.54. To make an investment in a new fermenter, under the Treasury menu, select Make Investment. On the next screen, you'll see the investment option for the fermenter. The total cost for the fermenter is $50,000. A residual value of $10,000 is listed, and a service life in months of 240 months, in other words, 20 years. The next column shows the amount to depreciate. For capital items, a depreciation expense is added to the income statement. This is not a true expense in the sense that there are no checks written for this. Depreciation expense is used to avoid overstating earnings for a company. Many assets have to be replaced after a service life, and by including a depreciation expense representing the usage of that item over time, in the case of an additional fermenter, the monthly depreciation expense is $166.67. Fermenters are stainless steel vessels, which probably can serve longer than the 20-year depreciation life. Companies frequently want to show a service life as short as possible because then the depreciation expense is larger, the company shows less income, and has to pay less income tax. The lead time for this project is 75 days from start of contract. Clicking on the Profile option shows the cash payments required on the first day of the investment. $20,000 has to be spent as a down payment to contractors. 60 days into the project, an additional $10,000 payment has to be made. Finally, 105 days into the project, 30 days after the fermenter should be online and running, a final payment of $20,000 must be made. To make the investment, click on the Invest option. Note that the investment will start 7 days after the current date. In other words, it takes 7 days for the contract to be finalized. This investment can be made before the simulation time starts advancing so that the fermenter is available as early as possible. Click on Make Investment. Click on the confirmation pop-up. And now the fermenter investment has been made. There is no option to undo this decision. To check on the status of the investment, under Treasury, select Check Investment. You'll see that the fermenter will be completed by 3/24/2018, just in time for the peak demand period for Alley Cat Ale. To summarize the investment timing, when the contract is signed January 1st, ArborCrest has to pay a $20,000 down payment. The project actually starts January 8th. A progress payment of $10,000 is made on March 9, 2018, 60 days after the start date of January 8th. The fermenter becomes available March 24th, 2018, 75 days after the start date of January 8th. Final payment for the project of $20,000 is made April 23rd, 2018, 105 days after the start date of January 8th. So ArborCrest should probably borrow at least $30,000 to fund this investment. ArborCrest starts the simulation with 3 loans and will have a 4th loan if money is borrowed to install a new fermenter. The 3 initial loans have different balances, These loans are also made against different collateral items, buildings and improvement, machinery and plant and equipment, and land. The interest rates are different, the balances are different, and the payments are different. Payments are made automatically. For the building and improvements loan, it's on the 20th of the month. Machinery, plant, and equipment loan, it's on the 8th of the month. And on land, it's on the 4th day of the month. This scenario allows you to make additional payments, which will pay off the balance or the principal of the loan. Making an additional payment on a loan does not change the payment that's due, but it does reduce the balance and reduce the amount of that payment that goes to interest. To eliminate the monthly payment, the entire loan must be paid off. If the company has additional cash, it should be put to some purpose. Paying off loans is one good use of cash as it reduces interest expense over a long-run period. To make an additional payment to principal, there's a new menu path, Treasury, and under Treasury, select Pay Loan. This screen will show the loans that are outstanding, the interest rates on the loan, the monthly payments, balance due, and payment date. The highest interest loan currently is at 7%, using machinery, plant, and equipment as collateral. To make a payment on this loan, select the loan, and then enter the payment amount. Suppose the payment amount is $20,000. This is entered with no dollar signs, no commas, just 20000. Click Confirm Loan Payment. The pop-up window asks you to confirm the loan payment. Select OK. And now the balance on the loan, you can see, has been reduced to $28,232. And the additional payment is shown in the table below. To pay off the loan completely, select the loan, enter the balance amount, and confirm loan payment. Confirm in the pop-up. And now the loan is listed with a zero balance, which means the payment of $4,326.34 will no longer be taken out every month. As an example, the machinery, plant, and equipment loan is the highest interest loan that ArborCrest has. This loan is nearly paid off and will be close to being paid off at the end of the year. Over the year of the simulation, without any additional payments to principal, $1,788 will be paid in interest expense. If this loan is paid off early with a payment of $27,770 in May, no more payments are made of the loan and no more interest is paid. Interest will be reduced by $619. This reduction in interest expense does not seem like a lot, but it only requires making a loan payment and moving cash from a bank account that's not earning significant interest to a payment against the loan. In addition, imagine that the company is making a 10% margin on its products. To earn $619 would require the company to sell $6,190 worth of additional product. So the savings of $619 is in fact significant. In addition, the savings would continue on year after year with the additional payment to principal. The next highest interest rate loan is the loan against the company's land. With the normal payment schedule over the year of the simulation, $4,179 in interest will need to be paid. If this loan is paid off early, for example in August, this will result in an additional savings of $1,346 in interest payments.